Look at this lighting. Perfect. So anyways, welcome back to my channel. My name is Trey, and on this channel we talk everything from finance to building your brand to digital marketing. But yeah, let's get into this video. We're going to be talking about the stock market and how to invest in the stock market, how to make money, how to buy shares, all these type of stuff. So I'm looking down mainly because I have my notes that I'm looking at to try to flow with this video. So anyways, first things first, how do you start? Like, how do you get started? So first, what is the stock market? A stock market is the aggregation of buyers and sellers of stocks, which represents ownership claims on businesses. These may include securities listed on the public stock exchange. So each country has a stock exchange. So for example, Jamaica Stock Exchange is called JSE, Jamaica Stock Exchange. So you normally go on the JSE website and you look at what stocks are being offered to the public, and then you pick which stock you want to buy. Obviously, it's more complicated than that. So when you're deciding which stock you want to buy in a company, that then translates to shares. So how many shares do you have within a certain company? And based on how many shares, tells you how much money you can make over time. So the next big thing, how do I buy shares? So first of all, like I said before, you got to try to understand what type of stocks is your stock exchange offering. So Jamaica Stock Exchange, you go on the website and then you start to look which companies are offering shares. But in order to buy shares within these companies, in order to buy those stocks, you have to sign up with a stockbroker, and then you create an account, which is now your stock account, right? Or your equity account. And then you will then, through the account, invest, or rather put money within that account, and then you go ahead and buy shares on the stock market. Another interesting question is, how much money do I need? So it's relative. You may need a lot, you may need little. It's relative to where you live in the world and what type of stocks you want to buy. So for example, in Jamaica, you can find stocks as cheap as, let's say, $1 Jamaican, or as expensive as 1,000 Jamaican dollars, right? So that's $1 per share, $1,000 per share. So it's very relative. Now, if you're looking at, say, the US stock exchange, then obviously you can see price ranges from like 500 US to even higher, or you can even see prices as low as 20 US. Depends on where you are and what stocks you're looking to buy. So what else can I buy on the stock exchange? All right, you can buy stocks, as I said before, which is you buying shares within companies. You can also buy bonds. Now, what is a bond? So a bond is a fixed income instrument that represents a loan made by an investor to a borrower, typically a corporation or a government. All right, so how this normally works is your government will offer you bonds, or a company will offer bonds at a fixed rate. So say for example, you're gonna invest 500,000 Jamaican within this company, and then you're gonna get back 20% interest or even 30% interest, right? Now it's fixed. It's different compared to shares because you can decide how much you want to invest, right? Versus a bond. A bond normally says, okay, you fit in this category, you fit in that category, you have to invest this amount, you have to invest that amount, and then it has a fixed return of how much money you're going to get back. For shares, the return can be way higher or can be way lower. It all depends on what share you buy and when you choose to take your profit. A bond, it's normally at a set date and at a set time where you will get back that profit from you. Bonds tend to be a bit more safer though than buying shares in a company, because a bond is a fixed thing, right? Fixed instrument. Shares isn't fixed. Now, the next thing you can buy on the stock market is indexes, which are known as index funds. So what is an index fund? Now, basically, it's a group of stocks on the stock exchange that are within a certain category. So for example, on the Jamaica Stock Exchange, we have a Select F index, which is select funds, right? Now you have select funds manufacturing and select funds financial, right? So Select F. Anyways, now the Select F, which is all the financials, it's a group of financial companies on the Jamaica Stock Exchange. And then you have Select MD, which is manufacturing distribution. So it's a group of manufacturing and distribution companies on a stock exchange is grouped together. So if you choose to buy into that index fund, that now means that you own a piece of all these companies. Now, this can also be a bit safer. Index funds tend to have less fluctuation and you tend to invest a little bit less to own more. But the disadvantage to that is the weighting of the index fund. Because the thing is, if you have a more popular company within index fund, it is weighted more. So if that company drops in price, the entire index fund will drop in price. And especially if the other companies are doing well, but it is weighted less, it doesn't really matter. It doesn't really work for you, you know? So an example of this is the Select F, like NCB has, not quite sure, so don't quote me on this, has like 30%, right? And then other companies have like 10, 5, 1, 1, 1, 2, 2, 2, stuff like that. So if you have that huge 30-40% dropping while the other 1-2% increasing, that 30% is going to carry on the entire thing. So that's the advantage of index fund. But it can be very good to own a piece of the market, entire like market, because then as everything grows, that grows for you, like fluctuation. Right? How to make money while investing? You have two main ways to really make money. So you have capital gains and you have dividends. So let's talk about each. Capital gains. This is basically when you buy a share within a specific company, and then over time that share, the value of that share rises, and then you sell it, so you make a gain. So here's an example. All right, so say we're buying stock in a company that's worth $1, right? But then a year from now, for some reason, you know, it shoots up to, you know, $10. It means $10 per share. When you bought that $1 per share, right? 1 turned to 10. That's 1,000% back on your money. Like, that's crazy. If it's 1, then turns to 10, that's 1,000% gain, right? So imagine now you say you invested $2,000. So 2,000 times, you know, 1,000%. That gives you back at 20,000, right? Which is now $18,000 profit. So your 2,000 turns 20,000, which gives you 18,000 profit. So it's stuff like that. Now that's how you get capital gain. So a real life example for that would be Wigton Wing Farm in Jamaica, right? So how that worked was the share price was 50 cents, 50 Jamaican cents, and then the price went as high as $1 Jamaican. So that's 100%. So everyone who invested, their initial investment went up by 100%. So if I invested 40,000, my 40,000 turned 80,000. It's as simple as that. That's capital gains. Now, dividends. All right. You can look at dividends as a salary or a wages. So a company pays the shareholders dividends to basically say thank you for entrusting your money to us and thank you for believing in us, right? So they want to pay you to continue to buy more shares or to keep your shares within the company. Offering dividends also makes that company more attractive, because a company that offers dividends tend to attract more investors, and more investors tend to invest within companies that offer dividends, right? So how does dividends work? It's normally a quarterly dividend or a yearly dividend. So how that normally works is, depending on how much shares you have, they'll give you a certain percentage. So for example, each share that you own within a certain company, they'll give you 50 cents per share, right? And that's what it normally would work. So say you own 10,000 shares, that means you get $5,000 each quarter or each year. It all depends. So the more shares you own, the higher dividends get. Now the aim for dividends is to own as much shares as possible, so that your dividends can actually be your wages, and your wages can actually help you to pay, you know, bills or whatever you want to do. People can actually live off dividends, especially if you have like a high amount of shares within a certain company and you have like many companies that offer you dividends. So looking for a company that offer dividends is very important. For me, I tend to look for companies that offer dividends, but also look for companies that I can see some capital gains. So then that brings us now to trading on the stock market versus buying and holding on the stock market. So buy and hold. Now I think that's easy to understand. You literally you buy a share and you hold it for as long as you want, right? So obviously you're going to know that there's some companies that you definitely want to buy and hold. So for example, here's a US example. I'm going to buy Apple. Now, say I was buying Apple in the early 2000s. I was looking at this as a tech company, and it's going to make phones and all this. It's going to continue making phones. So buying Apple, you know, in the early 2000s, I'd keep Apple because I know that, this company is going to get better and better and better and better. An example now in Jamaica is basically buying like a food company like Grace or Lasco. No, why? Because obviously people are going to always want food. People are always going to want to buy these products. So you know that Grace and Lasco has potential for growth. We see that Grace is selling products abroad, right? So you see that Grace is looking to expand, and same for Lasco. So you can buy and hold them. Now, trading on the stock market. This is where you will buy companies and literally wait for it to go up in a certain percentage, then sell. And then you come back and you buy again and sell again. So each time, like, you're making like a 20, 30%, 10%, all depends. So you keep doing that and keep grabbing small profits over time to build up your wealth. It's as simple as that. An example of that would be, say, you're buying into Tesla, right? And we saw that Tesla shot up the other day. So you had all these shares for this amount of money, you sell it back to that price, and then it drop back down, you buy again, rise again, you sell again. Simple as that. Now that's buying and holding versus trading. So this brings me on to the last thing I want to talk about when it comes to investing. Why should you invest, right? Or what's in it for you? Obviously, like I said before, you can make money while investing, but you can also invest to create generational wealth. So as I said before, buy and hold. Especially with index funds, that's a good type of like instrument to buy and hold. So normally when you buy index funds, they offer dividends. So if you want to create generational wealth, you can buy that and buy a lot of shares within an index fund, a lot of units. So over time, it starts to pay you dividends and pay your children dividends. So you see what I'm getting at here? When you buy stocks and buy shares within companies, you can also pass that down to your children. So that's a great way to invest your money. And investing is very important, right? If you want to generate wealth, you can't just literally look at it as, okay, yeah, I'm going to just work and get my wages and save my wages. Investing is really the way to go for it. When you're saving with a bank, you get like 0.1% or 0.05% interest, while investing can give you up to, as I said, 1,000% over time. Just depends on how long. Yes, it may be a bit riskier, but I think it's better to take calculated risk than just leaving your money within a bank. As simple as that to me. So yeah, I definitely think anybody who wants to get into investing should definitely go into it. Probably have a few more videos on investing, so if you like this video, just leave a like and subscribe and drop any comments in the comment section below, and we'll talk about it more.